Well, hello, traders and investors. I'm L.A. Little. This is your daily NeoTA wrap, where we take a look at these markets and we do it a little bit differently. We're looking at supply and demand on the charts, folks. We're looking at neoclassical concepts I introduced 2009, 2000. Actually, I created them in 2006. The books were published in 2011 and a year later. These concepts, supply and demand, it's looking at where you can expect certain things to happen. You measure those tests because the market is all about test, and then you take that information and use it to make your trades. Do this show 4 times a week, every Monday through Thursday, broadcast at before 10 o'clock Eastern Time, archived on YouTube and under the channel LA Little. And if you want to subscribe to the free content, just push the button up on the right-hand corner there on the YouTube. If you want to help the show, there's all these little Twitters and Flickrs and Facebook links that you can, any show you see that you really think is of value, put it out there to your friends. Let them see it. Maybe they might be interested in what I do as well, and I would certainly appreciate that. As far as these markets today, well, it was another day of I can only go up. It's been that way for a while, and if we look at the numbers here, INDX another 0.35%, 20 points higher. And if we look over at the Russell, slightly higher. NASDAQ higher. You were flat on the S&P, slightly down, and a little bit down on the Dow Jones Industrials as well. Overseas, red. I expected these guys were going to pull this back this week. That is what's starting to take place. They hammered the dollar. That pushed up the gold and pushed up the, let's pull this back up, pushed up the gold and pushed up the silver today. So what you're seeing is that rotation kind of thing we've seen before, where bonds go up, gold goes up, silver goes up, market comes down, right? Well, wait a minute. Market went up. Well, no. Market, if we call it the NASDAQ, it went up. The rest of our market's struggling, folks, has been and will probably continue to be. Let's look at the S&P 500. I had told subscribers sometime back we could get a nominal new high. Well, we definitely got one, right? Got over the top here, finally, breaks out. That's what this X is. Suspect, not enough volume compared to the volume on this bar. That makes it suspect. You draw them across, you can see the declining volume. You get over it, you come back. What is that? That's an over-under, but a little bit more volume today. So kind of negates the over-under, but what is it doing? Well, it's doing a bearish retest regenerate. Off of what? Off of this bar. The fact that you're coming back within 6 bars has certain implications. The implications are that you can get to the bottom third. That would be back down into this area. Now note, we already got there once before. And also note that there's another bullish retest regenerate that still has held, and that's this one. In other words, this one has not broken. So when you try to test, if you can't break it down, you're going to regenerate to the upside. That's what we saw happen already. Now that regeneration has happened, what is it going to do? Well, because it's coming back on a bullish retest regenerate, it's going to come down and try to test this one. Where is it going to try to test to? Right back to the same area. So you can expect this market try to work its way back down there again. That's all of the what should happen. And most of the time that happens because that is what should happen. That's what the probabilities suggest. And there's various probabilities associated with these events. If you want to know more about that, you can pick up my books. You can subscribe to the site. Or you can watch me enough to where you can probably figure it all out. And, it's up to you. But anyway, that is what's happening, and that is what you should expect. Now, if it does something different, then the market is either stronger or weaker than we think, and that calls for us to pay attention when those things happen. If we look at the other indexes here, let's pull up the NASDAQ. And the broad NASDAQ now has been continuing the push to the upside. We had a little ABCD structure here, 60.54. The top of that is about 80 points. 80 onto this gets us about 61.35. And that's where we already went over. So is that true? Yeah, 61.35. So we've already done that ABCD structure. So the little one that was in effect right here is already done. So that one is off the map. It met it. That's great, right? That says you can keep doing what you've been doing. So you got a large one here. Now this one, if it actually takes place, is going to be a nice big one, right? That thing can take you a long way, because if you take the distance on a 1-to-1 from here to here, that's a long way. It's up over the top of this area. That's the NASDAQ. NASDAQ still not giving any kind of signs that it wants to pull back, other than the fact it's doing one thing you don't want to see. You're losing volume pretty rapidly as you go up. NDX, looking about the same. This chart has the same features. Losing volume on the way up. That is ABCD structure. It's already finished it, and it's got the big one in effect. It looks exactly like the NASDAQ. And we move over to the Russell. Now the Russell, for some reason, we're not getting quote volumes yet. And so let's try to estimate this baby. Let's see what the IWM's doing, and see what those volumes look like. So a lot yesterday and not much today. All right, so let's go back to the Russell. Okay, so the Russell's different, and the Russell's been different, and primarily because the Russell is small cap domestic, right? It's not overseas. You're not going to make money on overseas stuff, and that's what's driving these large caps right now, is they're making money overseas. Well, if things aren't doing quite as well here, and you don't expect as much here, this thing's going to struggle, and that's what it's doing. It was in an uptrend. That's what these arrows told you. Got it in an uptrend, continued in an uptrend, now it pulls back. What does it do on the pullback? Well, it does something it shouldn't do, and that is it violates the bullish retest regenerate. And we had talked about the violation right here and said, hey, it can bounce, but it's probably going to come back. Well, that's what it did. But again, it couldn't continue down. They keep hanging it up here. This, to me, is trying to break the swing point low. It keeps coming at it. That's a wide price spread anchor bar with a swing point on it. It makes it somewhat valuable. It makes it harder to break. But if you do break it, again, folks, there ain't nothing down here again. You got to come all the way down to this area again. And so if you see that break, you're going to see those bullish, not the bullish, but these green bars, which tell you where the next set of buyers should be. They're going to be down here somewhere probably. So don't get sucked into this idea that this thing is simply going to hold and it's not going to fall, because it can. This is the area that's key. You can see it on this big volume bar. You can see it on this anchor bar. You break this area, there ain't nothing underneath. And that can lead to a larger, faster retrace on that time frame. If you pull it over on the monthly, on the weekly, right? All these charts on the weekly look great. Now the Russell in particular is the weakest of the group. And that is that it's had this broad range. It went over it a couple times, couldn't stay up there, tested on the bottom of it a couple times. But it's just this broad range. It's been going on since December. Remember, we had that huge spike on the Russell that just like magnified everything, right? From 1100 to 1400 almost. So you did 311, right? It's 20 plus percent. Then you just sideways it, right? And as long as you hold it, that's great. But folks, the risk in Neoclassical is when your swing points set up in a congruent manner and you actually come down there and try to break them. And what did I just say on the daily? Well, that daily, and let's get the numbers here. The numbers on this end is 1335. Now let's go back to the daily. 1335 on the daily is guess where? It's right down here in this area. And where did I say support's going to be if this thing breaks? You can get a faster move. Well, that's almost at that area, 1345. So in other words, if this thing does make the fast move to the downside, right? Probably not going to break it on the first trip, especially if you come straight down like that, right? But then you get a bounce, and then you set up an ABCD structure to come down and try to break it out, right? And that is where the real danger is. Not there, hasn't set up yet, but if it does, you got to be aware of what's happening. So that's the indexes. I pay attention to what's happening on a daily basis, and members ask me questions. And being the caring soul that I am, I pay attention to what members ask. I try to pay attention to what they want. I try to give them as much as I can and help them, right, to be successful in their trading. That's the whole ideal of this site. One of the questions not so much one of the questions, but one of the things I did is a few days ago I pointed out short squeezes that were starting to take place. And this has been the hot trade the last week or two, right? Look at this volume, these volume bars that came in out of nowhere when this thing took off. Now, if you look at it neoclassically, what was it doing? It was doing a bearish retest regenerate here, tried to regenerate lower, unable to do it when it took off here. So in other words, when this thing spiked, you knew something different was taking place. In other words, you couldn't regenerate lower. That says that you can go larger to be upside. And given the short interest that's in this stock, you can see a huge move. This is Valiant Pharmaceuticals, been sold off like crazy. All right, this thing is moved from something like 225 to what is it, almost $8. Talk about a haircut. You know, Ackerman must be loving that. So it takes off, and there's short interest like crazy. So this thing, as it spikes up, it spikes high on this bar. And that bar is this particular bar right here. And so your volume is huge, big spike, and a lot of times that can be the blow-off type top in a short-term move, and we're on the daily chart. And so as this was spiking, you know, I brought members' attention to it here as it started spiking and saying, hey, here's not a bad trade. And I was looking at a couple others at the same time. DDD was another one. I traded both of them. Members traded some of those. I don't know which ones, you know, who traded what, but a particular member did trade this, and this morning he wrote me. And he said, LA, he said, what's the picture now on this VRX? He says he managed to keep some, and he wants to know what it's doing right now. And I said, oh, well, what a nice ride. But look, you know, 1560, if we look at it on the weekly, and let's pull the chart up so we can see it together here. Let's pull up VRXX. And let me go back because I don't want to have to take these, you know, I had to cover up, you know, to protect the innocent kind of thing. But I said 1560 looks like the tops. That'd be a full retest regen on the weekly. We'll look at that together. But I would be trailing stopping this now because the 1455 is going to be a hard bar to get over, right? And it's got to do that if it's going to continue higher. It's a nice ride for him. So let's close that. Let's get rid of this. And let's look at it on the weekly. And I'll show you what I was looking at, right? You've got this spike up. Oops, I'm on the daily. Let me pull up the weekly. And on this spike that's taking place, here's the weekly. It's coming back into one of those bearish retest regenerates. Here's the swing point low. So we saw how it played out on the daily, right? And it usually respects them, and it's more than 6 bars. Now the thing is, and because of the short interest being as high as it is this really shouldn't get higher than about a third of the way up. It's pretty much done that. It's actually gotten about half the way up. And that says it's stronger than you'd expect, and given the short interest, that's probably true. Big spike up, but it's going to be hard to get over that bar. What's the top? 1455. What did it do today? 1455. He asked me that 1 hour into trading today. If we actually look at the chart intraday, you know, that question came to me somewhere in this bar here. I don't remember exactly when it was. We topped out at 1455, and then we started right back down. About a 3.5–4% swing today. If you made that trade and you had some sort of a trailing stop, this would have been a nice bar to trail it on. You know, put a stop right up in here. You would have saved yourself quite a bit. And it looks like after hours it's down more. That's the sort of thing that you have to do neoclassically. You got to be able to look at these charts, make decisions, and these neoclassical concepts give you the ability to make those decisions. They show you where the supply and demand is. It was obvious that there was a lot of supply demand. There was a lot of demand that had gotten eat up already, right? A lot of supply that was at that price point. When it came back up there to test it, it could not get over it. Compare the volumes here on this, 15-minute chart. As a matter of fact, it'd be easier. I'll just pull it to a 30-minute chart so you can see it. But if you compare the volumes back here on this spike up, let's pull it over. Look at that spike up. And look at what it's telling you in terms of the neoclassical structures. You have a spike up, you got good volume, right? You do a 2-bar reversal. You come down, you come all the way back up to test it again, and what are you testing with? Absolutely nothing. The buyers are walking away, folks. That's what's happening. If you see that, you know you got to cut and run, make your money, move on to the next trade. For tomorrow, we got the little two-bar, not a two-bar, but you got the over-under, but not so much that. You got the retest regen happening on the S&P. I still expect Europe's going to be somewhat weak. To me, it looks like we're stuck, right? We can't go up, can't go down. The bias has been to the upside. But the thing that's most concerning, if anything, is that technology has been on a tear. When technology goes away, I don't see what's going to hold this market up. Have yourself a great one. I'll see you next time. Take care. Good night.